Hello, everyone, and welcome back to Sailing Success with ARCSHIP. I am your host, Jayarti Rai, and today we are diving into a topic that's both daunting and exciting for companies: IPO, or Initial Public Offering. It's one of the biggest milestones of any company's journey. But have you ever wondered what goes behind the scene? Let's hear it from our very special guest today, the Chief Financial Officer of ARCSHIP, Mr. Bharat Dhingra. Welcome, Bharat.
Thank you so much, Jayati. I'm thrilled to be here and ready to unpack the world of IPOs with you.
That's great. So, Bharat, let's start with the basics. You have helped so many companies launch their IPO. I just want to understand from you, for the one who don't know, can you explain us what an IPO really is and what goes into the process?
Sure, absolutely. IPO, initial public offering, which is basically nothing like offering a private limited company going for the public limited for the first time. So they offer their share to the general public. It is basically a transition from a closely held company to a public limited company. It's a very huge milestone in the journey of a business, in the journey of a company, because you get to see that broader pool of investors. You can raise money, and that money can be used for the expansions, research and development, and then you can enhance into the new markets, and even you can repay your old debts. And it depends upon you how the expansion plans are.
Okay. So, I guess that makes it a game changer.
Absolutely.
But I have heard so many people say that an IPO is like an exit plan and plan an opportunity for the early investors to cash out. Do you think it's really true?
That's a great question, Jayarti. Yeah, it's true. Some people look IPO as a way to cash out. Indeed, yes. Some early investors and founders have an option to sell their shares and liquidate the money. But it's IPO is basically more broader term to that. It's for the growth, and every company has their own strategies. But yes, some people look in that way. But it is more to that. As in my perspective, uh, it depends upon how you use the money. Some has a plan to sell it, some has a plan to invest in the business and run it, giving more to the society, attract new talents, go into the new market, try new ventures. It depends upon you how you use the money.
Okay. So, in your journey so far, what have you seen people do more, like invest to the growth plan or cash out?
No, see, people have a plan why they are raising the funds. Even when you go to the regulator, you have to mention the plans why you need funds for that. You have to specify the reasons, and you have to stick to that because it's the public money. You cannot use it anywhere. You have to use to the specific uh, allocated like expansion plans only. Or see, you at the time of filing of the prospectus, you have to specify the plans. It could be repaying the debts which I said in the initial statement, and then you can go into the new markets or you can try the new ventures. But yes, as a company, it's the funds are coming in the company. But at the back stage, yes, investor has the right to sell the shares, liquidate the shares, and get the money in.
I love that perspective. So, you are trying to say it's not an end of a journey, but the start of something new. Bharat, for our viewers, I'm sure they are wondering, like, you are a very young CFO. So, how do you take up these responsibilities and make sure that you're doing a great work for the companies you work for?
Jayati, I do get a lot of this. This is a prominent position which I am sitting with, and it comes with a great responsibilities. It has pros as well, cons as well. But I have of this belief that you have to be very adaptable, flexible what you are doing, because you are answerable. You have to justify your position. I believe that age does not define experience. I have worked with the prominent leaders, rather like mentors, who has given me the experience how to deal with the situations. I'm still learning it. I'm not saying that I have learned everything. Failure has given me the experience. I believe that Fresh mind gives a fresh prospect to the table, brings a fresh prospect to the table. And if you are handling something as significant as IPO, that's require a fresh thinking as well.
That's very well said and very impressive, because I'm sure all of us are looking for the brilliant idea that can change the lives of many. Okay, now getting back to the IPO, can you break down for us each and every step that is involved when we talk about a company going live into an IPO?
JRT, it's quite a journey. Going public require immense planning of months and months, if not years. It's something like becomes very stressful for you, but at the end it's a rewarding process. It starts with hiring of the merchant bankers or the investment bankers. Then you need to hire the lawyers, the auditors, FEMA consultant if you have the foreign transactions. Whenever the merchant banker is hired, they are hired either of the three models. One is like the best commitment model. Under this, they give you the assurance that this much of money they will raise for you or they will generate funds for you from the market. They give you a firm commitment for that. Second one is the best effort model. It is something like they will do their best. Anything happens, it's your plus and minus. Third one is like syndicate model. Syndicate model is like if your company is too big, so and merchant banker feels like they cannot handle single operately or they cannot operate single-handedly. They hire a level of merchant bankers. So it's a syndicate for them. So they work in that model. Then comes the valuation. Valuation is something like the backbone of the company. It can either make you or either it can break you. I can relate one example. IRCTC, Indian Ticketing Arm. When they came up in the IPO, it was oversubscribed by almost 110%, making it a huge IPO. But rather nowadays, many IPOs are coming with the oversubscription. They have a good valuation. But at the parallel stage, there are many companies who struggle to get a successful IPO because their valuation is not been done properly. They struggle a lot to make it successful. Then once your valuation is done, your prospectus is filed. Prospectus is basically a merchant banker like outlines everything related to the company, whether it promoters profile, whether it's company's profile, whether history of the promoter, the expansion plans, projections, risk profile, what your competitors are earning, what you are earning. They file everything in a document and submit to the regulator. Why you need a merchant banker? Because you directly cannot go directly to the regulator. You need to have a merchant banker in place. They are an intermediary. They are a face for you for the regulator. They do every communication with the regulator on behalf of you. When they file a prospectus, to and fro communications happen with the regulator. Then once everything is approved from the regulator side, now comes the distribution thing. Distribution is basically how you are going to float your shares in the market. They are qualified institutional board. You have to give them a certain quota of your shares. They will sell in the market. Then you have foreign institutional investors. You have retail investors. You have non-institutional investors. You have certain criteria to meet. Like you have to sell them their shares. Once everything is done, your distribution is done, then like it comes like you need to have a road shows. You need to pitch to the potential investors why they invest in your company, why they should come and join you. It's like dating, a speedy dating. You need to pitch to the investor. You need to convince them your project, your business should be compelling enough to attract them. So these of many steps are required when you go in the IPO.
Wow, that sounds like running a full marathon. So, Bharat, two questions from that. Number one, as per your experience, what do you think is the best model when choosing a merchant banker?
See, every merchant banker has their own set of things. The first criteria is the evaluation. When we provide them the projects, when we provide them our financials, when we provide our insight information of the business, they evaluate things, as I mentioned. Because they are the men on ground, they know the better reality than us. They have to evaluate. But as a businessman, as a CFO, if I have to see that, I will go on the best commitment. Because I have to assure myself that I want this much of money from the market. Because the valuation has been done. I know my company, what my plans are, how I'm going to use the funds. I need this much of funds for the expansion. You see your efforts, I see my efforts. You give me this money, I have to expand. So that's kind of role I expect from the merchant banker.
Right. Coming back to that, I recently read about an article where IPO of a Delhi-based company was oversubscribed 419 times. And they could, I think, gather a whopping 4,800 crores. So, to get such an overwhelming response for an IPO, what do you think are the factors that are considered? Is it the structure of the company? Is it the size of the company? Is it the market? Or what affects it?
Great question, Jayati. It's really a combination of many factors. First of all, yes, business model, financial stability, financial revenue, market value, your market propositions, and even sometimes the market sentiments as well. In this case also, when I was reading, because I did not get the chance to bid in this prospectus, to bid for this IPO. When I was reading it, I even observed that it has been oversubscribed. But see, it's like investors are ready to invest. If you give them a good picture, if you give them the good business opportunity, they will invest. They have funds. They will utilize. The bank FDs or the interest will give minimal return. Getting the return from the IPO is a much bigger term. In this case also, it was a combination of everything: financial stability, business model, economic climate, and sometimes backup of the big investors is also a hype. If you have the big investors supporting you, it gives a message to the society or to the investors in the public that this company is backed by this person, renowned person, brand value is there. They got to give you the investment returns. So they will eventually invest so that they can earn more. They rely on you. They see the potential growth in you. Sometimes it happens like this way. But we cannot say that it was simply one or two things which makes the IPO successful, size or structure. It's a combination of so many things, as we discussed.
That's really fascinating. And I would want to know from you personally, when you, Mr. Bharat, you are subscribing for an IPO, what are the few factors that you consider before putting your bid?
As per my knowledge or as per my experience, if I say that I have invested more than 1,000 IPOs, but luckily or fortunately or unfortunately, I've been lucky for only 10 or 12 IPOs, because you generally get a chance to, because every time, like when you go into the market, I generally bid for the renowned IPOs. I do not go for the startups or something. So that's why if you have a brand with you, people are coming for you. You just need to enter in the market. People will come for you. You need to sell your business. You need to sell your business project. People will definitely come. They want to generate returns. But when I bid for the IPO, I generally go through the prospectus first. What is the business plan? How they are giving returns to the existing business? What is their average rate of return? How many years they are running the business? Who are their backups? What are the risks involved in the industry? Because it's my money, I have to invest thoroughly. Every person has the financial sense where they have to invest. So I go through these factors.
So basically, you're trying to say that whenever a company is coming up with an IPO, they have a lot to prove. They have to prove to people every nitty-gritty, every growth that they are trying to show.
True. So when you enter an IPO, when you enter a public image, you face so many challenges. One of the challenges that you get into surveillance. When you do a private business, you have the control on that. But when you go public limited, It's just not the regulators, it's the investors, the media, everything. Everyone has the eye on you. If you do something wrong, if you do something great, it has an impact on your stock price. Every quarter, there is expectation from the company, from each of the investor, that you will do something good for them. You will do something good for the company. And at the end, they can earn revenue on that. They can earn dividend on that. So it's a challenge for them, challenge for the company. And see, going public also require corporate governance and transparency, which does not come at an economic cost. It requires a huge funds investment at the initial stage itself. So there are so many risks, so many challenges a company has to face. It's not for everyone. We can say that in simple terms, IPO or going public is not for every company. It should align with the strategy. It should align with the vision of the company. People rush for it, but then at the end they end up paying or they are incurring more costs. You have to be very vigilant what you are doing. That's the only say.
You touched on something that's really important, the long term strategy that we are talking about. So, I would just like to share something. I have heard about so many companies rushing into IPO only to regret it. So, what would be one advice that you would like to give?
Jayati, you have a very valid question. The biggest piece of advice from my side is don't rush for it. Make sure going public fits the company's vision for the long term. It's not all about the raising the capital. It's about sustaining public life, meeting expectation of the investors. Every quarter, you need to give them, otherwise it will have an impact on your stock price. It comes with a lot of pressure. You need to have a very solid fundamentals of the business, the best of the best team in place to face the pressure. It's like, in a simple term, we can say that you are moving to a house which is made up of glass. Everyone sees everything. So you have to be very vigilant, bear the pressure of having the image of the public entity. People would be looking, will be like very wild eye. You can say that people need returns. If you do something wrong, the regulator is always there, but regulator also have their own limitations. It comes from the inside. It comes from the integrity of the businessman, how they want to function. So it requires immense planning for that. Don't rush for it.
That's such a vivid way to put it. A house of a glass. That means transparency is what you're talking about. I'm sure going public comes with its fair share of challenges and risks. So, can you enlighten us with some of them?
Absolutely. One of the biggest challenges, like you under surveillance. Surveillance, like when you are a private limited, you have the control over your business. When you go public, there is an eye from the investor, regulator, and the media. If you do anything great, if you do anything wrong, it has an impact on your stock price. It directly hit you. It depends. It reflects all the valuation. If you do something great, the valuation will go up. Something wrong, valuation will go down. And there is a quarterly expectation from the investors that you will provide them the dividends, the business will grow, the business will flourish. There is a undue expectation from the investor side. And when you go public, obviously it requires cost. It requires corporate governance, transparency. So it comes at a cost. It does not come at an economic value. So that's why we say that going public is not for everyone. It requires immense planning and it should match with the vision and strategy of the business.
So true, Bharat. This has been an eye opening conversation. You have demystified IPO for all of us. So, would you like to give one final message to all the viewers?
I would just say that do your homework. Make sure that you have the best team in place. You have a compelling business model which attract investors. It's not all about the IPO or raising capital. It's way beyond that. What comes after the IPO? The real work starts there only.
That's a fantastic advice, Bharat, and thank you so much for joining us today and sharing your expertise on the IPO. I am sure our viewers are going to like it and they are going to think about all the steps you mentioned before subscribing or the companies before putting their foots into an IPO. Thank you so much.
Thank you, Jayati. It's been a pleasure.
And to our listeners, thank you for tuning in to our episode of Sailing Success with ARCSHIP Business Unpacked. Stay tuned for more deep dives into strategies, growth, and finance. Till then, keep watching and keep learning.